The Fed is using copper-gold ratio in tracking economy and its growth. The one in white is the GDP, and the one in yellow represents the copper-gold ratio. And we can see that from this historical data that GDP tracked very closely to this ratio. During the start of the pandemic, this ratio reached its bottom first, and subsequently GDP hit its trough. And currently the copper-gold ratio is still under this downward pressure, which indicates that the economy may not be recovering that soon. My name is Con Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. And before we discuss about today's topic, please do take some time to read into the disclaimer. Copper is one of the most widely used metal. It's highly valued for its electrical conductivity, corrosion resistance, and malleability, which is the ability to press without breaking or cracking. It is widely used in electrical wiring, plumbing, electronics, and renewable energy systems. In short, when economy grows, there will be a need for construction, and copper will be in demand. Reversely, when there is a slow in demand for copper, this may also represent a slower economy. In September, we discussed copper is the next to move because of China's stimulus plan. They are the largest on copper consumption, though I'm seeing demand may gradually be back again, but it will not be the same as before, as the China infrastructure investment cycle, or some call it IIC, has reached its peak. This is not just about China's consumption. The demand also refers to the rest of the world's consumption. And let's go back to this ratio again. Therefore, how to use this ratio to track the economy and growth? And why use copper-gold ratio and not copper itself? Let me just rephrase on this copper-gold ratio as demand versus inflation ratio. And let me try this again. Demand with copper, inflation with gold ratio. And I hope we should be able to see it more clearly. If the rate of demand is slower than the rate of inflation, I'm referring to the rate of copper prices in moving upwards is slower than the rate of gold prices moving upwards, likely we will be seeing a slower economy to come. Let's study into the copper itself, and based on this study, it should be gradually moving higher. And I'll be tracking on this monthly band. This is a monthly chart, and also its weekly band down here. And for the monthly chart, that we can see that as I draw this uptrend line and I parallel it, that we can see that the copper over the historic has been tracking this uptrend, which means that over the long term, I'm seeing that copper prices will gradually move up. And let's look at the weekly chart here. And as I apply the same strategy here, that I draw the uptrend line and I mirror it, this will be the weekly chart. As we look a bit finer into the weekly perspective, and this is what my expectation will be, that the weeks to come, copper may range bound around this weekly chart. And something interesting here is that where is the main resistance for copper? And let's look at the yearly chart down here. And what I'm intending to do is to look out for the resistance point, which is important here because I believe that once this resistance being broken above, and I believe that copper will move much higher in years to come. And let's study about this year here, which is in the year 2010, that we could see that copper closed here, copper opened here, there was a false break, it settled here, there was a false break on this year itself, and it settled here, and this year it there was a false break, but it is not settled yet. But in any timeline of a yearly chart, if it closed above this, I would say about 4.45, and I believe that that year and after, copper would continue to trend much higher. In our last tutorial, we discussed tracking the inflation with crude oil and gold ratio. And the market is pointing to us that there's a risk of inflation pointing higher. And in today's study, we saw economy could be pointing lower. And I would like to hear from you about your thoughts on this. If I'm going to combine both of this ratio, which is a higher risk of inflation and a risk of slower growth, what will be the outcome? We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I'd love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.